Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. For Tuesday, April 12th, it is 6:38 as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures, oil bouncing back 4% after it was down 4% yesterday. So the volatility remains, but if you look at a chart of oil, this 98 level is a critical level. It's support on the charts. Nat gas continues to climb, up 1.5%. Copper up 1%. Bitcoin finally a green start to the day, up 0.5%, and gold and silver about 0.5% as well. Really, the thing that's front and center today is the CPI print, which comes out, I believe, at 8:30. So, whatever the markets are doing, they're marginally green this morning. But whatever gyrations that they do between now and that CPI print are basically probably going to be invalidated, at least with an initial whipsaw move. So, not going to spend a whole lot of time looking at or thinking about the pre-market setup. One thing I was talking about yesterday in the video and in the trading room is the potential for a really, really jaw-dropping hot number, which would open the door for an early rate hike by the Fed before the May meeting. If it comes in line, and I think the consensus was something like 8.3, something like that. Don't quote me on that. But if it comes in, over 9 or certainly over 10 as a jaw-dropping number, I wouldn't be surprised if the Fed comes in after Easter with something. Either just saying we're starting our 50 now and we'll take a look at it in 4 weeks after this at our first meeting in May, and we may go another 50, whatever. That's all speculation. So let's just see how the print turns out, and then we'll take it from there. Starting off this morning with our McClellan oscillator for the NASDAQ, and you see we've dropped down significantly. Now we're down at the minus 35 area, and so now we have to start sitting a little bit taller in our trading chairs because we're getting towards this oversold area. The one thing I don't like about this indicator is it's not really real time. It's end of the day. So you kind of have to guess, if you will, when you start getting in close, at what point do we cross over 60 into oversold territory? So we got to keep our eye on the ball here and not get way out over our skis. And the thing is also, say you were a person that didn't want to short anything up here. Well, if we're already down here, it's not the time to start shorting. Now, if you got a big long book that you want to hold on to, that's a little bit different. That you're just going to, hedge for, some kind of waterfall risk. That's fine. But to go out there with new shorts just as the index goes oversold, that's a potential for a disaster. So if you had gotten in shorts up here, as we move down into this area, you're going to want to start to trim those back and position for a long. So my point in all this is to say we're getting a lot closer to actionable information on the oscillators.
And if I were to go to the NYSE, it would look exactly the same way. So let's jump into our indexes and FATMAAN names. SPY, gap lower yesterday and basically closing on the lows. This 440 is going to be an important area. And then we've got the 200 coming in at 437.50. I think those are the two levels that you need to focus in on today. You know, losing the 200 would be a bearish technical event, while a move to the 200 with that holding would be a marginally bullish event. You don't want to get on the wrong side of the 200 if you're bullishly inclined. Now, the thing I want to mention is be ready for the look below and fail. What is that? A big, scary type plunge, and then they buy it up and then close right above the 200 again. You know, this is a perfect setup for that, in the sense that, you know, you've got a big macro number. They sell it off in the pre-market. Everybody walks in and we're down 2%, you know, down here somewhere. And there's kind of like a panic type reaction. And then they start buying it up, close the gap, and close it back above the 200. That's just one scenario. It's not a prediction. Just be aware of that potential. As we move down in time frames, you'll just see higher resolution on the chart. Notice that price had gapped down right below the 50. So that's, in essence, that's what I was just talking about, you know, gapping down. Now, in this case, it was gap and go, where they just kept selling it down here to 440. I also want you to notice the large volume over price bars here, creating that value area that would span from approximately 440 down to, let's say, 433 down here. And then notice you've got more voids in the chart the farther down that we go. So even if there is some kind of a sell-off, you got to have 433 hold, or you really start falling off a cliff. Here I've got the gap marked for you with a little pivot point. Obviously, we're going to open somewhere around 440. So a break back above 441 would give you a pathway back towards the gap that still needs to be filled, or do they, you know, give it a little run and then roll it over? So these are the areas that I would look for support on the downside. Qs, much rougher shape technically, down 2.4% yesterday. We gapped down and then came into this 340 area. I've got the gap marked for you. The thing about the Qs is that now price is well below all the moving averages, and you can actually see that the bear stack is forming once again. Just as a reminder, the bear stack is the slowest moving average on top, being the 200, and then working your way down towards the faster and faster EMAs. Here we've got the 20 and the 50 together, and in the pink we've got the 8 EMA. So in a day or so, this 8 EMA is going to drop faster, and then the 20 EMA is going to drop faster than the 50. So after a day or so, that classic bear stack on the moving averages is going to be formed once again. We'll have the 200, then the 50, then the 20, then the 8, and then we can watch those going forward, because oftentimes those moving averages act as support and resistance when when it tries to put in a bounce. Those moving averages overhead will be resistance to overcome. QQQ 2 hour. Here was the gap. Here's our large volume over price support here, right at 339. You lose that, and then you're into not an absolute void, but certainly down below what I would call value here, where all the trading has occurred. Then we move down into a much thinner zone of support down below. And really, I think once this 339, if it were to break, I think it would be most likely for price to somehow find these prior lows, at least for a test. And here you see the levels just on the 30-minute chart. Not a ton to add here. Just giving you a little resolution on the support levels below, and you've got the notice the number of gaps above that have yet to fill. We've got the one formed yesterday. We had one formed the day before, and then we had a larger one even back early last week that are still yet to be filled. So we don't know when those are going to get filled, only that eventually they will be. So we'll have to see, is there some type of a rally sooner rather than later that would ramp us back up, or do we just keep rolling downhill? IWM, the bearish stack on the EMAs remain in place. 200, 50, 20, 8. Here's the little gap, and we're down here at near 196. Notice here also on the daily chart, if that were to break into a decent sized void below, where I think you come down and test the bottom of this range yet again near 188, 189, and then that fits in well with the idea of fake breakout, moving back into the prior range, and the target being the far side of the box. Here's some more resolution on the price action with some intermediate support zones. If it wants to go down to the bottom of the box, here are some levels above where it might find a little bit of support that you can trade around. Same thing here. Notice on the 30-minute chart, we've already dropped down below this big area of value. And one thing I want to point out, just as I'm looking at it now, a lot of times the market does not give you the entry that you want. And I'll show you an example right here. Say you were thinking to yourself, well, I'm at support. Chances are there's going to be a bounce. So I'm going to wait to kind of see what happens at this level. And you're thinking to yourself, okay, as long as it holds above, I can be bullish. But if it breaks below, I want to be bearish because it's below this prior trading range. and below all these support levels, well, guess what? They gap it down and don't give you that option of getting short on a breakdown. It just happens all at once. And so you would then have to make a decision. What am I going to do after the gap down and quick move down to next support? Am I going to, try and get short here? That would have been a frustrating day because you bought the low, or you sold the low, and then it stayed above all day. And then you had to wait. There's just been some choppy action. And it all started because you did not get a good entry here because of the gap down. So always be a little bit cautious when you see a gap down. Know where your next levels are, where you can objectively react, rather than trying to take a position here in the middle of the range where you really got not a whole lot to shoot against. What I wanted to point out is you've got a big or decent sized value range here with the large volume over price bars. You break below this 196, then you get into this thin zone where price can move rather quickly. Moving on to FATMAAN. Again, gap down, found support right at the level we had marked, made a rally back up to touch the bottom of the gap, then roll over. So I think right here at right around this 215.50 area, you're going to have a pivot. As long as it stays above, you're okay to be long. But if it breaks below, then you've got levels here. And I thought it was interesting yesterday that the market did not discriminate yesterday. It went after the generals just as hard as it went after, individual names. So mega cap tech yesterday did not go unscathed at all, down 2.64% on Facebook. Same with Apple, 2.5%. Here, that same scenario we just got done discussing, it jumped right over support. It went from 170, which was support right here where we had it marked, and then it gapped down below that whole support structure and then kept on going, closing on the lows. I think the level that you got to worry about on Apple is right here at this 163, 162 area. I want to show you the daily chart, where here was the big rally. Now we've rolled over. We've got the 200 down at 167, but we've got a support zone that starts here about 161, 162. So if price comes down and it can't hold this level here, we come back for another test of the 200 EMA. Tesla, I think the pivot is still 1,000. Gapped down yesterday, went to back touch 1,000 and the gap, and then just kind of oscillated, closing on the lows of the day, but not dramatically so. Given the gap down, it just didn't keep going. It kind of maintained support there. So I think you can be short against 1,000 there, looking for a move down towards 945 for starters, but I think it's going to end up end up down in the high 880s, 900. If it can recapture 1,000, then that would be a very nice reprieve for the bulls, because then the door would be open to fill that gap and then go up to the midpoint of the range at 1040. Microsoft, bad day at the office, down 4% on a pre-market analyst note saying they thought that Office 365 sales were slowing. So big gap down, gap and go, finished on the lows. And I missed that move. Why? Because I didn't have an alarm set and I had other stuff on the screen. So shame on me. Those are the kind of mistakes that, if they happen often enough, one, would be very frustrating, and two, it's expensive. That's why I say, but I didn't do what I often preach and say: set yourself a lot of alarms. And I would much rather get that alarm, look at the chart, and then make a decision. What do I want to do as far as that particular issue? Is it, do I want to be long? Do I want to be short? Or where's the next level where I want to be long or short? And by not having the alarm, you just don't have any opportunity to make a judgment. Now, if you did have the alarm and the thing went off, you'd rather know than not know. And so if you decided, well, I got enough on my plate right now, I don't want to trade Microsoft, or I want to wait till it gets to this level, that's fine. And even if that decision turns out to be wrong, at least you had an opportunity. And that's what was so frustrating for me yesterday. I missed putting on the alarm, and that way I was totally in the dark when the move happened, and it kind of precluded me from getting involved at a level that I would have liked to at least know about. So looking at for today, I think right here at 286 is going to be your pivot. If it can recover that level, I think it can go back up to this 290 and a half area. But if it breaks below, especially if it gets down below 280, then you got this prior low down at 272 that would be teed up for a back test. Amazon has been working its way down in a quite orderly fashion, just steady selling more or less from the top. Broke this head and shoulder structure, got the measured move rather quickly, and it's just been stair-stepping its way down, bear flag, down, bear flag, down, bear flag. See what it does today. But as long as it's below this trend line, I think you got to be leaning bearish. So I think this 30-30 area here is going to be your pivot, and you see the large volume over price bar here down towards 2900, 2910 is going to be a very important level to hold, because again, you look below and all the volume over price support kind of fades away, and that's where price can move very, very quickly. Another one, Google, 3 3.33%, outperforming to the downside. Same kind of look as Amazon, just steady selling over the last week or so, losing this 2600 level, and now the door is really open to go down and test these prior lows at 2520. And just like always, the bull side of the equation is, what's the first key level that it could reclaim? And that would be here at 2600. So it comes down, reclaims 2600 from below, you could get long there and then look for 2620, 2640 right on up the ladder if there is a kickback rally in Google. Netflix down 2%, not really doing anything. I think this is just going to come down here and check this prior low, and then it'll decide whether that wants to break or more consolidation above that level. I have not been paying a lot of attention to Netflix. I do have my alarm in on the low, just in case there's some kind of a move that I could participate in. But I'm not trying to trade these gyrations in here with expensive premium and not really moving a lot each day. I would rather wait for a breakout above the 50 or look on like a weekly chart on a breakdown below this prior low. How much room is there to the downside? Can I get in a position where I can expect a fast move to pay for that premium? And so that's what I'll be looking at on Netflix. Here's SMH, Semiconductor daily chart. We had the big explosive move, and now we're right back to the lows right here at 240. I think you've got to have that 240 in the crosshairs with an alarm set. You break 240, you can see the drop off in volume over price support. I think you can lose like $15 in a heartbeat below 240 here. So I would definitely have that alarmed, even if you're not gonna trade it. I mean, if you're involved in the queues and semis are falling apart, I mean, they're an important sector within the semis, or excuse me, within the queues. So if you see big risk-off moves in important offensive sectors, that's going to give you more confidence on being short in the queues. And, as always, if we're looking at an ETF and you're kind of more of a guy or a girl that wants to trade individual names, for any ETF, you can go to anetf.com and find out what are the large constituents of that ETF, and then you can focus on either those names or some of the smaller names. So in SMH, you're going to see Intel, NVIDIA, AMD, Micron tilted towards the top of the index. Your bigger companies, and then you'll work your way down. Taiwan Semi is probably there near the top as well. So depending on whether you want to use an ETF or hunt for individual names, that's how you can do it. But I would definitely be watching 240 like a hawk on the semis. I want to just give you a few names here to put on your either watch list or for swing trading. This Bed Bath and Beyond, I don't know what it's doing. I think just from a fundamental perspective, if I couldn't understand this at 45, it comes down. You got to remember, this thing started at like $8, between $5 and $8 way back when, and from what I can tell, I don't see anything changing like at the stores. So I keep maintaining this is a dead company walking. Everything at Bed Bath and Beyond you can get at Amazon for cheaper. The standing joke is you never go in Bed Bath and Beyond without the 20% off coupon, which basically says all the prices in the store are fake because nobody pays those prices. They all have the 20% off. So, I know they've had a management change and everything, but I just keep thinking, and it's my own bias that, they're going to fade this and end up back at 5 one day. When that is, who knows? But short term, you've got a big gap to fill with price sitting right on that gap and below all the moving averages. So if you want to take a shot at something on the short side, I think a break into that gap, especially if the market wobbles, I think it's going to fill that gap down to 1625 pretty darn fast. Here's CHGG. This is set up as a more or less a bracket trade. You've got a big gap above that starts in and around 39.50, call it 40. It built a big base here over quite a number of months between 24 and 32.5. Now it's broken out in between the two. So what I would do on CHGG, if you're interested in trading it, number one, alarm the gap. That's a big gap, and it's something you probably want to be in if things get all bullish. It's wow, it's $22. So you don't want to miss that one. So set yourself an alarm here at 39 or 40, wherever you want to get involved. And then set another alarm on the downside at 32.50. That way, this may end up being more or less like IWM in the sense that it moved lower, built a big trading range. There was a breakout, but then if that breakout fails and it comes back down into the box, back to 24 or 25, this will come, and that will be a move back into the box. And also notice where the 50 EMA comes in, it's right at 32.50. So that's going to be an important level. It's not only defines the trading range, but also is where the 50 is. And nothing good happens under the 50, and nothing good happens once you've been out of a trading range and move back inside. So I think that either way, either on a long or short, would be a good risk-reward trade. This one is very similar in the sense that this is Foot Locker. Big gap down. Found support here at 28. Mark your gap here at 32.50 with a gap up to, let's call it 41.50. So you've got a decent sized gap above, but if it loses 28, then down it goes. And so I would expect a move. Let's see, if it started at 44 and went to 28, you're basically saying, the bear flag flies at half staff. You'd be looking at something down in the low 20s on Foot Locker. Here it is. I measured it out on the weekly. Bear flag, A move, flat flag, B move, C move, down to 20. So that's just on a measured move basis. And you see the big, really last stop volume over price bar right here that comes in around 27. So that might end up being a nice trade. Either way, to fill the gap and rally back up to the trend line, or does it just keep rolling over and heading down? This is CNX. This is a trade idea that I sent out, I think it was yesterday. But I've seen a lot of option activity looking out to October and January. October this year, January of 23. Guys looking for a breakout. Pretty decent volume. And so see if I can find it. This is a coal name. This is the daily chart of CNX. You can see the impulsive move higher and then a very, very tight flag forming. I mean, this is, a beautiful setup in the sense that, number one, it's moving up nicely. But during this resting period, the moving averages are catching up, so it won't be as extended as it would have been if this just kept going with big green bars. But I like that setup. And going back to the monthly chart, it's in a really, really important line on the chart here at 2250. You break above that, and then technically the door opens for a move much higher. And just looking at the chart, you've got a series of highs across here that basically come in around 35 to 37.50. So that would be worthwhile for you to participate in if you get the breakout. So what you can do is set your alarm at 2250 or even 23. Make sure that breakout level is confirmed. Then you can get long and look for a move higher. And so I opened a small position in, what did I open? I think I bought October 22 calls. Might be 23, so don't quote me, I forgot. But I am long the name. So, but as far as you're concerned, you don't have to front run it like I did. It may consolidate under here for a while. And, in that case, I would be frustrated waiting for a breakout where if you held off and put your alarm just above, you'll know when that alarm goes off, it's time to pay attention and get long if you're interested in the name. So let's wrap it up there. Hope you got something good out of the video. If you're new to the channel, thank you so much for spending some time with me. I work hard at giving you and the rest of the traders good objective levels to shoot against, along with some observations and trade ideas each and every day. If you jump over in the show notes, you'll find a link to the website where you can drop in your email and register for all my content. That would be awesome. You'll also get an invite to the trading room. And don't forget hit the subscribe button and the like button on the YouTube channel. That way you'll get notified of when I post new videos. So nice to have you. Appreciate it so much. So let's see how CPI goes. Let's see how the market reaction goes. And we will look at it after the dust settles. Maybe do a recap video this evening based on the action. We'll have to kind of wait and see. But until then, I look forward to talking to you next time. Have a good trading day. And that's it. Talk to you later. Bye.